Hello traders, you're welcome to this video. In this particular video, we are going to be looking at the expanding triangle pattern. Now, the expanding triangle pattern is a very straightforward pattern. Yeah, it is easy to identify when it shows up in the market. It's very straightforward. Now, this pattern occurs when price action forms higher highs and lower lows. Unlike the bullish structure that forms higher highs and higher lows, like we can see here, this is a high, right? This is a higher high, this is a higher high, and this is a low, this is a lower high, lower high. This is a low, this is a higher low, this is a higher low, and the higher low, right? This is a bullish structure. And as for a bearish structure, we can see that this was a high, this is a lower high, this is a lower high, and this is a low, this is a lower low, right? Lower highs and lower lows form bearish structure. Higher highs and higher lows form bullish structure. But the expanding triangle pattern is different. It forms higher highs and higher lows. Okay, so now we are going to identify um, an expanding triangle pattern right here. Okay, I already spotted one on my chart. Now we can see that this was forming higher high, right? Higher highs and higher lows, right? And then it was forming lower lows. Can you see? This is higher highs, this is higher highs, high, higher high, higher high. This is low, lower low, lower low. So this is an example of an expanding triangle pattern. So now basically, how do you find entry points on this pattern? Remember what we already talked about concerning trend lines, because it is your knowledge of trend lines that is going to enable you know what to do, when to spot, how to spot an entry point and an exit point. So after you have your first two touches, the first 2 points, right? This is the first point that we use to draw our trend line. That's the first point. This is the second point that we use to draw our trend line. Okay. Now, as for the other trend line above, this was the first point that we used, right? And then this was the second point that we used, right? So now, at the third point, when you have the third point, you can enter your buy trade, because if that trend line is valid, price ought to get rejected. So you can enter your buy trade at the third point. But now, because it is lower lows, so you will not be able to set your stop loss below the previous low, because the new low is actually lower than the previous low. So in this situation, depending on the time frame that you are trading on, you can just use a risk to reward ratio to determine your stop loss. So for example, if you have any notable support around, like a horizontal support, in this situation, we actually have a support around here. We can see there are multiple price rejections. We actually have a support, a horizontal support around here. So if you have a horizontal support, you can just use that to determine your stop loss. Set it some pips, maybe like, depending on the time frame. If you are a day trader, maybe you can use 30 pips, depending on your risk tolerance though. But a significant distance from the support level, you can set your stop loss there after you enter your buy trade. Then you can be targeting the next resistance, or you can just wait for price to get to the dynamic resistance, although that is going to take a longer time. But depending on your patience for holding trades for long, you can decide to just wait for price to get to the dynamic resistance, or you can use the next static resistance for your exit. Okay, so that is it. And then for a sell, after the second touch, the third touch, right, you can enter your sell. And then for your stop loss, if you have any, you can see we have resistance around here. Okay, so if you have any resistance around, you can just use that to determine your stop loss. So you can set a stop loss right above that static resistance, and then your take profit you can just target the next support. So in this case, this is going to be a support level. So we would have targeted here for our exit. So we would have considered exiting here, or you can just wait for the price to get to the dynamic support as well. So whichever one, you can exit at the static or exit at the dynamic, right? So basically, that is how to spot your entry and how to exit your trade using the expanding triangle pattern. You can also decide to use other indicators like maybe the stochastics or the RSI for extra confirmation when you want to exit or enter your trades. So that is just how it works. I hope you found this video insightful. Note that you can use this pattern alongside any other strategy, any other trading strategy that you are using. You might not only want to rely on just the expanding triangle pattern, because this is just a chart pattern. You might not always find this pattern show up in the market. So you cannot like just depend on this pattern alone, that you will just be trading based on this pattern alone. Okay, you can just combine this with your already existing trading strategy if you have one. All right, so kindly like and subscribe for more trading insights. I really hope you found this video insightful. Cheers guys, and happy trading.